And welcome back to the Steve Malzberg Show, ladies and gentlemen. We had some very disappointing jobs numbers today, which conflicted greatly with the ADP estimates from 2 days ago. I mean, really, about a quarter of the jobs predicted came true. And we are joined right now, I'm very excited about this interview, by Bob Wiedemer. He is the author of the Aftershock Investor, and he is the gentleman who predicted the market crash in 2008, and he's got more information for all of us. And Bob, welcome to the studio, and welcome to the show.
Thanks for inviting me, Steve. It's good to be here.
Well, it's my pleasure. All right, first of all, let's start. I mean, the statistics are very troubling. I mean, you know, we're living in two alternate universes here. We have a stock market that gained about 20% over the last year, yet we have, right now, we had a 70-something thousand jobs created in the month of December. We have a record number of women not in the labor force. We have growth slumping, the slowest in 3 years. 1,500 people came out for a chance to apply for a very basic job in one locality. We have 92 million Americans now not in the labor force. How do we reconcile the severely hard times that people are going through, and yet the booming stock market?
Well, it is two different worlds. One is an asset price bubble, in my opinion. Stocks are going up, real estate's going up, and that actually should normally help encourage people to spend more, buy more, boost the economy. It's amazing we're having this kind of job problem when you have had such a good market and such good real estate market. It's obviously very, very, very out of touch with each other. I think clearly the stock market is often a fantasy world, and you know, ultimately that's going to change. But I don't really, you know, reconcile it other than the Fed is printing a lot of money, and that's boosting up asset prices, but clearly not helping the economy anything like what they had hoped.
Is the tapering going to be significant and help things in your view? Or, you know, especially with these jobs numbers, and even going in, Janet Yellen was a fan, apparently, of the QE. So when she got first nominated and then confirmed, the market rallied because they love that stuff. So I don't see her being too different than Bernanke was, do you?
I don't. In fact, I would say she's Ms. Money Printer, even more so than Bernanke. So I think she's going to be reluctant to print. Fed Governor Coach Lakota from Minneapolis is actually saying they shouldn't be doing any tapering. My feeling is that they're going to be reluctant to taper. I know a lot of people said it'll be over and done with this year. If it is, and I doubt it will, be tapered that far or even tapered very much, I think they'll bring it back, especially if there's any issues in the stock market. And let's keep the tapering magnitudes in mind. We're still printing $900 billion a year. Yes, that's down from $1 trillion, but $900 billion is more than our entire money supply in 2007. All
right, let's talk about what the well, first of all, tell me where you think the market is headed and where you think the economy is headed. The United States economy, and of course we're so interconnected globally, the global economy.
Two different directions. The stock market could keep going up based on that Fed money printing. Clearly, I'm not saying it won't have some issues this year. I doubt it will be anything like last year, but it could keep going up. The economy, no. I don't think that we're getting a rebound that people are talking about. We saw bad retail sales over Christmas. In fact, it was the first Black Friday weekend that we had no sales growth, or actually a decline from the previous year, and that's in the last 7 years. Even during the recessions, Black Friday grew. And in the jobs numbers, a telling sign. Healthcare jobs, which have been rock solid and been growing for years, we actually lost 1,000 healthcare jobs last month. So I think the economy is going to continue to be very slow in its growth, you know, 2%, 2.5% max, and again, that's assuming the inflation adjustments are correct. The rest of the world's not doing very well either. Japan is slow, Europe's slow, England, all those countries are slow growth. Yes, they may have their ups and downs, but fundamentally it's a very, very slow world economy. And I think that's reflected in the fact that fundamentally our jobs are not growing. The good jobs are certainly not growing. So I don't see much growth in the U.S. economy. Perhaps the market can push it up a little higher, but we're stretching it more and more, and it's getting more and more dangerous.
All right. Now, you so accurately predicted the bubbles and predicted. Tell us, let's go back before we go forward, and tell me exactly, not exactly, but tell me how you sensed what was coming back in 2008.
Well, basic economics tells you a lot. How can prices of homes go up 80, 100% when incomes are going up 2 or 3%? It just doesn't make sense. And not only that, it's not feasible. And actually, the only way we got around that is that we made those crazy loans, right? All the, you don't even no interest loans, adjustable rates that would give you a low initial rate. So we did crazy lending to try to get around that. And that's the same thing here. Is fundamentally, you can't have that stock market going that much faster than GDP unless we're, well, doing crazy loans. And if you think about it, that's exactly what we're doing now on a national scale. We're borrowing as a government $700 billion a year, printing $900 billion. You take that out, we wouldn't have any growth in this economy. It would be negative. So it's really fake growth. And that's what's the same thing that happened with the housing bubble. It was really fake growth that wasn't based on fundamental income increases that were based on productivity growth. They're based on financial bubbles.
We're talking to Bob Wiedemer. He is the author of Aftershock, the Aftershock Investor, a crash course in staying afloat in a sinking economy. All right, so let's try to get it personalized right now. You got people out there watching you, listening to you, and they're saying, "Oh my God, okay, I have a 401k, and my kid has a 529, or I have a 529 for my kid." It all depends, of course. Your advice may differ for how far out in both circumstances the particular person is, but generally speaking, or if you want to get it to a 10-year need or 20-year need, but what should people do? What do you advise? I mean, you say that the recovery, quote unquote, is fake, right?
Yep. Absolutely. What do you do in a situation like that? Well, let's face it, the only investment that really performed well last year, major investment, were stocks. Bonds did poorly, commodities didn't do too well, with the exception of natural gas, which was the big winner last year. But for most normal investing, stocks worked. And I'm not saying they probably won't be a good place to be in 2014. They could work again, maybe not as well, but with lots of money printing. And I don't think we're going to taper anything like what people expect, or what some people expect. I think stocks could do okay, even some high dividend stocks. What I guess I'm saying is it's the longer term. You mentioned 5 years or 10 years. That's where the real problem comes. Probably not as much over the next 6 to 12 months. Not saying it couldn't be bumpy, but as long as they're printing as much as they are, that's certainly going to keep things up for a little while longer. Reality has to hit, but over the 5 years, then I'd be very worried about being a lot in stocks.
Well, Larry, let's talk about real estate.
Yep.
I mean, how can, you advise the average person or to get involved in real estate? Are we talking about REITs? Are we talking about, flipping? Are we talking about, well, what when you say real estate, what are you referring to? And the average person may not be as well schooled and well versed, so when they hear real estate, they think, well, buying houses, and I already have a house and a mortgage, so I can't do anything.
Right, and real estate is generally buying your own home, which I think as long as you get a fixed rate mortgage, in many cases it makes a lot of sense. Certainly I own my own home. I think that makes sense. In terms of buying and flipping, that's getting harder. Price increases, although we had a nice price increase last year, it slowed down a lot in the last couple months. In fact, in December, we had almost no increase in home prices from the previous year, according to the Case-Shiller Housing Index. So if you want to do real estate, you may have found that window is starting to pass for flipping real estate. But if you're buying your own home, which is the biggest real estate investment people make, get a fixed rate mortgage. And I'm not saying you have to stay away from it, but you may find certainly the last year of gains is likely to be much slower next year. It could even turn negative by the summer of this year.
All right, let's talk about gold. Gold is another one of these things out there that people are frightened of for various reasons, because when you say buy gold, people say, well, I have gold jewelry. How am I going to go buy gold? And, gold funds, mutual funds, gold stocks, and then, of course, there's gold, physical gold, gold bullion, gold coins. How should the average person try to invest in gold? And you see that as a diversification? Do you see that as something they should have? What percentage of their portfolio in?
I'll answer all those questions. In terms of gold, people are afraid of it, and the reality is they were afraid of it when it was at $800 an ounce. People are scared of it, yet it more than doubled. It's still up 50% from that point, which was actually just before the financial crisis. So
yeah, it's about 12 now, right?
Right. So we're about 1250 today, 1245. So it's been a very good performer over, since 2000, certainly much, much better than the stock market. It's still up 300% or close to. So, it's done very well. The way to invest, and again, I don't think gold's necessarily going to have a great year this year. Could be up. Certainly last year was horrible. It was the worst performing commodity, certainly. And it's going to be rocky, although last year was the first year it's been down in 13 years. So keep in mind, it may seem scary, and it is, but it's been a good performer long term. Long term, in terms of investing, a lot of people do like 1-ounce bullion coins. We had a record year for the U.S. Mint in terms of gold coins last year, and that's true with a lot of mints around the world. That's how people invest. That's certainly one way, 1-ounce gold bullion coins like the Eagle. Other ways are EFTs, obviously. Those are like GLD, things like that are a way to invest through, say, a Schwab account. I do think it's overall a good investment. I'd be careful about putting much in it right now. Let's just kind of see how this goes the next year. I think there's still some skittishness in that market, and it's hard to give a percentage as to what anybody should have in it. But I do think long term, I think it'll be a good performing investment.
All right, well, let me ask you this. One more, we're talking again to Bob Wiedemer. He is the author of the Aftershock Investor. This is a second edition, an updated edition, correct?
It is. Just came out in November. In fact, it should be on. It's on Barnes & Noble shelves, Best of Business section. In fact, I'm doing a signing in the Fair Lakes Barnes & Noble down in Washington, D.C. Tomorrow.
Oh, great.
On Saturday at 1 o'clock. So it should be quite widely available, and it's just came out within the last couple months.
Let me go one more, and you say long term for retirement. So it's really those people who, if you're 20. Are you worried about the long-term future? I know if you're 50, that you're probably saying, watch out. But if you're 20 or, you're just starting out in the workforce, getting those 401ks, put the money in stocks and just let it ride for the next 30, 40 years? Or are you long-term that pessimistic?
Well, that's what you're supposed to do, is save some money. I mean, the reality is most kids who are 20 right now are just struggling to get a decent job.
True. But if you do have that option,
if you can, I always think you should be saving some. You can change over time what it's invested in, but I think savings is good, and I think they should save. Right now we have, young people, as a lot of other people do, have a tendency to basically live paycheck to paycheck and spend everything they got. That's not smart, long term or short term.
All right. So if you are any person, right, a middle-aged person, let's say 40-year-old person, and you just got an inheritance, you got $100,000, and you're fortunate enough that you could sock that away somewhere for your future. What would you tell that person, average person, where would you urge them to put that money?
Future is going to change, and where I'd encourage them to put it now will be different from where I can encourage them in a few years. This year, I think still some stocks. I mean, stocks, high dividend paying, I tend to prefer, and even maybe some higher interest bonds like municipal bonds or so forth. So it's going to be a little bit conservative this year in a sense, but longer term, I think we're going to need to diversify that a bit with some more gold down the road. But frankly, this year I think will continue to be a reasonably good year for stocks and some bonds. All
right, Bob, a pleasure to speak to you. A pleasure to have you here, and I wish you nothing but the best. Everybody check him out tomorrow down in D.C. at 1 o'clock at what was the bookstore again?
Fair Lakes Barnes & Noble.
Fair Lakes Barnes & Noble in Washington, D.C. The book, again, The Aftershock Investor. Bob Wiedemer, pleasure to meet you, sir.
Thank you.
All right, folks. So when we come back, a very interesting conversation ahead. We're going to speak to the police chief of Detroit, Michigan. And he has made some very interesting, what the media, of course, considers to be controversial comments about guns and how people should be able to carry. Law-abiding citizens should be able to carry guns. Oh, my God. Coming from the police chief of Detroit, of all people. All right, so we'll address that. We have a lot more ahead. We're going to speak to Rich Lowry later in the show, Susan Ferrecchio, Lou Dobbs will be here. All that straight ahead, and you know where it's coming down. Right here on the Steve Malzberg Show, Newsmax TV and radio.